Alright, so Google just announced their Q4 2021 earnings, which ended up being another blowout quarter, no surprise. However, they did surprise us with a 20-for-1 stock split announcement, which would end up taking the share price below $150 per share. And with Google stock having an insane run-up of over 230% in the past 5 years to nearly $3,000 per share, it was inevitable that a stock split was on the horizon. So in today's video, we'll be first pondering the question, why would Google even announce a stock split in the first place? And secondly, is Google stock a buy before or after their upcoming 20-for-1 stock split? So if you do enjoy this video, don't forget to drop a like, as it does really help out my channel, and if you haven't already, please consider subscribing with those bell notifications turned on so you don't miss any of my future uploads. Also, if you're interested in tracking exactly what I do with my stock trades, you can join my Discord community of investors through the link below, where you'll also gain access to weekly group coaching calls and much more. But anyways, with that said, let's get straight into Google's stock split. Alright, so firstly, what is a stock split and how does it actually work? So a stock split happens when a company chooses to increase the number of its outstanding shares to boost the stock's liquidity, usually by a factor of 2-to-1 or 3-to-1. However, in Google's case, the stock has risen so much over the past decade to nearly $3,000 per share, so they chose to do a 20-for-1 stock split, which is very uncommon, and this would bring the share price down to approximately $150 per share once it takes effect on July 1st of 2022. Now, of course, this is subject to shareholder approval, but it's very likely that it will pass. Now, although the amount of shares will increase by a factor of 20 times, the share price will decrease by a factor of 20 times, so essentially the value of the company remains completely unchanged. So let's say that Google's market cap is $2 trillion on June 30th of 2022, right before the stock split happens. Well, assuming no major moves in the share price over that one trading day, on July 1st, the market cap of Google will still be $2 trillion. And as a Google shareholder, your personal ownership within Google stock will remain completely unchanged because Google is not diluting with these additional shares. It's simply splitting the existing amount of shares into many more smaller ones. For example, let's say you own 10 shares of Google right before the stock split happens, being worth about $30,000, assuming that the pre-split share price is $3,000 per share. Well, after the stock split, you'll then own 200 shares of Google at approximately $150 per share, again being worth $30,000. So your total position in Google remains unchanged. So technically speaking, it really doesn't matter if you buy the shares before or after the stock split, there will be no benefit obtained, even though you think the share price is a lot cheaper, because there will be proportionally more of them outstanding. As for how the stock split affects the existing shareholders, this is what Google said in their Q4 report. Alphabet today announced that the board of directors has approved and declared a 20-for-1 stock split, otherwise known as the stock split, in the form of a one-time special stock dividend on each share of the company's Class A, Class B, and Class C stock. So they announced this 20-for-1 stock split in the form of a special dividend where basically every shareholder is going to get an additional 19 shares for every 1 share that they own in Google before the stock split happens. So now that we know the stock split really has no effect on any individual investor's ownership of Google, why would they even want to do that stock split in the first place? Clearly, Google doesn't have an issue with liquidity, and this is one of the main reasons why companies will split their stock. For instance, we can see that over the past 10 days, an average of 2.36 million Google shares traded hands, which is about $6.8 billion in transactions. However, Google CFO Ruth Porat clearly communicated why they plan on splitting the stock on their Q4 earnings call, where she said, "The reason for the split is it makes our shares more accessible. We thought it made sense to do so." So essentially, the main reason why Google is splitting their stock is to increase the demand across the board from retail investors as well as the options market. You might compare this to something like a luxury sports car versus a compact sedan. Obviously, there is much more demand for a Toyota Prius versus a Porsche 911 simply because of the price. So Google is effectively increasing the demand from retail investors like you and I that might not be able to buy that many shares of Google, if one at all, and dollar cost averaging into Google becomes very difficult when the share price is high. So with a lower share price, many of us should be able to dollar cost average and average down on our positions much easier. But as I said earlier, this also applies to the options market. Currently, if you're looking to buy call options or sell put options on Google, meaning that you think the stock price is going to go up over time, and you're willing to purchase at the strike price, the cost is astronomical for retail investors. The smallest amount of money you'd have to have available in your trading account to sell puts at $3,000 per share would be $300,000, since one contract equals to 100 shares of the underlying stock. However, once Google's stock splits, the minimum amount you'd need to have available in your account to sell puts, for example, would be somewhere around $15,000. So with the minimum cost of doing options on Google being 1/20th of what it used to be, this is going to spur a lot of demand for the shares. And as we can see here, the total combined call and put options volume has been growing steadily over the past decade, with it seeing a huge spike ever since COVID began. So obviously this stock split should open up a tidal wave of retail traders and investors that aren't multimillionaires like the hedge funds and can then take advantage of Google shares. Alright, so now the real question becomes, should you buy shares before or after the Google stock split, and will it make any difference at all? Well, in my own opinion, if you can afford to buy Google stock before the stock split happens, I would say that it's a pretty good move considering their incredible earnings report they just had, good guidance, as well as the potential benefits after the stock split happens of increased demand. Also, if we look at some other examples of stock splits that have happened in the past 2 years, like Apple and Tesla, their stock prices have only gone up since, and of course a lot of this is due to the businesses doing extremely well, but there is that factor of increased demand for the shares. Also, if you think about it, there's another 6 months until the stock split takes effect in July, so basically Google's earnings and revenue could still be growing at rapid rates until then, which would have a positive effect on the stock price. And right now, I believe that Google stock's valuation is looking very attractive right now, if I'm being completely honest. So using the current share price of around $2,815 and noting Google's full year 2021 EPS of $112.20, this brings their trailing PE ratio to 25, which is completely reasonable for their growth rate. And although analysts are expecting basically no EPS growth throughout 2022, only 2.5% in fact, I think these low expectations could set Google up to beat on their upcoming earnings reports throughout the year, considering they have beat on every single one in the last year. And this would be especially true if management continues to buy back shares aggressively of the discounted stock price Google is at, since of course this would increase their EPS and all of the per share metrics. Also guys, the valuation that I calculated doesn't even account for all of the net cash they have on their balance sheet, as we can see here on Inverse. After subtracting all of their short and long-term debt from the cash, we basically come up with $111 billion of net cash, which is on their balance sheet, and this is great to see. Also, if you do want to gain access to this completely free stock research platform, you can sign up using the link in the description below. Anyways, if we subtract Google's cash and cash equivalents from the market cap, while adding back in the total long and short-term debt, we come up with a metric called the enterprise value. And right now, Google's enterprise value is approximately $1.75 trillion. Therefore, after backing out this war chest of net cash that Google has on the balance sheet, we come up with a trailing PE ratio of 23 for such an innovative company that's growing at very rapid rates. So I personally think that Google shares are at a very good value right now, and even if you can't afford to buy a single Google share, many brokerages offer fractional shares right now where you can actually get into Google stock and not have to buy one share, you can just buy a fraction of it. For example, Wealthsimple Trade here in Canada offers Google stock via fractional shares, or you can also buy Google stock on the Canadian Neo Exchange for only around $25 per share. So if you want 2 free stocks worth up to $4,500, click the link in the description to sign up for Wealthsimple Trade today. And guys, I actually just got a reward from Wealthsimple Trade of $261, being 1 share of Boeing, so it's totally possible to get these massive rewards. Anyways, if you can't afford Google stock right now and you don't have access to fractional shares, then you're probably gonna have to wait for the stock split, in which case it's not a big deal. You can still buy in and Google will still be the same company and it'll still probably do very well. However, those that can buy in earlier might get a slight advantage in terms of the demand for Google shares. Anyways, I really hope you enjoyed this video and that you understand a little bit more about how stock splits work and how the Google stock split could affect the share price in the future. So as always, don't forget to drop a like on the video as it does really help me out. And if you haven't already, please consider subscribing so you don't miss any of my future uploads. And with that said, I will see you guys in the next one.